I'm trying to understand the kind of the genesis of this ongoing story. Is this a systematic sell-off that is taking place across a broad market, or is this a series of idiosyncratic stories that are coming together to produce that same net result?
I think it's kind of been a circle, right, or a ping pong match, right? Because we started off with an idiosyncratic story at the beginning of the year about tariffs and trade wars and concerns about that and China, right? And that fed us into this worries about tech stocks, and that became kind of an idiosyncratic story. But that sold off, and I know you said we lost all of our gains for 2018, the S&P 500, but we're now in a correction mode for the FANG stocks. Okay, so then the sell-off in the FANG stocks, I think, led to a kind of momentum sell-off, and that now is feeding back into the market.
And it's other asset classes too. I mean, WTI crude is just above $54 a barrel now. It doesn't feel like that's based on fundamentals. It feels like that's a little bit of contagion too.
Right. So the fundamental story had been that the economy's strong, the tax cuts were working, and the labor market is strong. But then you started to get these other things like the housing market and oil, and that runs against that story of a strong economy. If the economy's not good, right? If we're running into a recession, which Guggenheim Securities warned about, that they're positioning themselves for a recession. If we're running into a recession, the market is not ready for that.
Where are the safe assets? What is happening to the money that's coming out of these asset classes? Because if you look at the 10-year yield in the US, it's only at 3.04%. It's not like we've had a massive move there. The dollar index is still in the 96 handle range. So where's the money going? Gold, let's have a look at gold. 1222, not much movement there either.
No, and it's not going to Bitcoin, right?
No, exactly.
So I think Treasury yields, given where people think the economy is and that people still think the Fed's going to continue to raise, Treasury yields are lower than you would expect. So I think some of the money's going there. Consumer staples have had a little bit of a run back, right? Consumer staples had been lagging. People worried about brands. Now people are buying some of those stocks. Retail stocks are up big. That's kind of where the long arc of that story is bad because of the internet. Some money's gone into there. So I think there are pockets. If overall at the S&P 500, we've lost all our gains, but there are still 240, almost 250 stocks that are up in the S&P 500. So that's the silver lining. The silver lining is, yes, we've lost all our gains. Yes, we're down a lot, like 600 almost when I was walking on. I don't know where we are right now. But some of the breadth, it hasn't been as large as, the breadth hasn't been as wide in the sell-off as it has in other times.